Okay, Dan, I just unmuted you. I want to thank you for coming back after some technical difficulties. I'm just waiting to hear you talk.
Hi, Dale. Can you hear
Hi.
me?
Yeah, Dan, guys, thanks so much for your persistence in coming back here. Had some technical issues this week. If you just hover your mouse around the drop-down menu, you'll see a green box that says Share. And then if you click that, you'll be able to share the screen that you want to show.
Okay, Dale.
And what a great time to have you back. I want to acknowledge you that, how long ago was it the last time you were on? About 6 months ago or 5 months
Yeah,
ago?
something like that, about 6 months.
So,
Yes.
almost everything you talked about has manifested. So
Yeah.
congratulations on being a steadfast bull in precious metals. There you go. So now you grab the screen. You see that green share box?
Yes, I can see that.
So you click that and then share. It'll show different, the screens that you have up. And then when you click it, we'll see what you brought today.
Okay, I'm not gonna use charts today.
Okay. All right. Well, then you know what? I'm going to take it. So we could go over some of these things that are happening in the precious metals. Why don't we start with, the most fascinating thing besides the continuation of the move, Dan, has been what's happened in the gold-silver ratio since you and I last talked. And I remember asking you, and I remember your answer, that gold was going to lead it, and towards the tail end of the move, silver would kick in. Well, silver has definitely, kicked in. Maybe it's the tail end of this particular chapter, but the gold-silver ratio definitely reverting back to still, I think, our extreme levels, 83. I remember it trading in the 40s, you know what I mean? So with silver way outperforming, and if you could see my screen shows the gold-silver ratio, could this mean that we're at the tail end of this particular run in the precious metals and correction could be due?
Dale, I don't remember exactly what I said the last time, but
I do.
it's been my my theory. It's been my theory for quite a long time that in this international monetary system reset, gold will lead.
Right.
Gold is the supreme etalon of money, of currencies.
Yes.
And silver is the poor man's gold. And I'm not using the term poor man's in a derogatory way. Silver has been through history linked to gold as a subdivision of gold for people who cannot afford gold. So it's not in a negative sense that I use the term poor man's gold. What does it mean? It means that in periods when we have a major monetary crisis, a currency crisis, a reset, silver stops acting like an industrial metal.
Okay.
Traditional financial analysts, fundamental or technical, are always surprised to see that silver doesn't respect their rules. And if you look today, silver acts more like a monetary metal than as an industrial. But if you look at the fundamentals of silver, silver is supposed to be now mostly an industrial metal. But as I said, in a period of monetary crisis, silver becomes the poor man's gold and starts to correlate. It goes from 30, 40%. It always correlates to gold, but it goes down in good times, in no monetary crisis. And in monetary crisis, the correlation goes up to 80%. So
Okay.
Gold leads. You need to have gold to indicate that the crisis is coming, that the crisis is here, for silver to follow and become a monetary metal. and silver still gives me signals that it is not sure yet if that's going to happen. I still think that gold could outperform here. And there is something that can happen, and it has happened in 2011, and that is you had gold moving in about 6 to 9 months in a quantum leap, about $600, $800 at once. So that's what I'm watching right now. And you might see, I'm still seeing silver, not sure that this is the time and this is the move. But certainly once gold gives the signal, silver would outperform gold, but not in the initial stages. So I wouldn't be surprised the ratio to continue after a small correction. The trend line on the ratio, the long-term trend line, it's still up.
Okay. All right. So here's what you were talking about in 2011. This is when gold shares quadrupled on this big rally. So peaking around 1900 and pulling back here, and we're headed. This was a big breakout. So was this the first indicator at this 1360, 1370 level of the beginning of the currency crisis that you've been talking about for a long time, the reset? And as long as we stay above this 1360 level, the crisis continues.
Yes, that is the signal. Something that I want to mention about this chart, there is a coincidence, incredible coincidence in when gold hit 1900, I knew it's going to be a correction at 2000 level. It had to have a correction. I did not expect the correction to be so big. Drop
or last as long in time.
And last as long as in time. But something that happened, we don't have the chart over here, but I wrote articles about it. What happened when it hit 1900, it corresponds to the 2008 crisis, right after the 2008 crisis.
Right.
And that's when central banks went into panic, and in collaboration with the IMF, they agreed to sell gold from the reserves of the IMF. I think it was something around 400, if my memory is correct, around 400 tons of gold. The IMF has decided at that time to sell and to print fiat basket of currencies, the SDR, at the same time. So what the IMF did at that time, they decided to sell, but they don't sell it directly. They sell it through the BIS, the Bank for International Settlements in Basel. So they transferred the gold to the BIS. Which
so sneaky. How sneaky, huh?
Yeah.
So what were they trying to do? Like they announced it, but they didn't want the market to know when they were dumping?
Exactly. So that's when they decided they started selling that gold. Now, they also said that it shouldn't affect the market because the sales will be between central banks. And one of the central banks who bought was the central bank, the Reserve Bank of India. But let's not be fooled. The market knows it. The market knows that there is a sell in the market. So it certainly influences. And if you superpose a chart of the price of gold with the starting of the selling of the IMF, it is incredible how the correlation, it's almost perfect, almost one. That
any whispers of a repeat performance with Christine Lagarde going to head up the ECB? She may have been there when that was happening at the IMF at 2011, so she knows the play card.
Yeah, there is a difference this time around, Dale, that you have to pay attention to. In 2008, there was a very strong, excellent collaboration between all the Western central bank and actually even China and Russia. There was a coordination, there were swaps between the central banks.
Okay.
That's
not here anymore.
That is not here anymore. Donald Trump is definitely a one-man show who doesn't want to collaborate, who hates the international collaboration. We've seen it with the G7 recently and the G7 in Canada last year. Donald Trump doesn't like international currencies like the SDR. So the circumstances compared to 2008 are completely different. What I'm worried today is that Donald Trump is the type of guy. He's the bulldozer who doesn't mind to go into bankruptcy. So
yes, he's the king of debt, he said.
Exactly. So he has given signals all the time that he wants the dollar down. He wants to pull the dollar down. He thinks that he can control the down move. And it's not going to happen. It's going to happen like Nixon. Nixon didn't expect the dollar to go down 85% against gold. He expected a correction and then a new agreement, but he did not expect that the dollar will collapse in such a drastic way in about 5 to 10, not 10 years. In the first 5 years, from 1971 to 75, the dollar lost 85% of its value.
What were those years again?
It started when he delinked.
The end of Bretton Woods? Yeah,
it started in 1971.
Okay.
And the drop went up to about 1975, 76. Okay. Then the rest of the drop was much less powerful than the initial one.
Okay, so you're thinking that be careful what you wish for, Mr. President?
Exactly. They think that they can switch the economy on and off like a robot. But once you start, it's like a war. A revolution, you have to be very careful because you know how it starts because you are the one who starts it. But you don't know how it's going to end. And we have the best examples. We have Vietnam. We had Iraq. They did not finish at all the way that the military West Point geniuses predicted.
Mission accomplished was not mission accomplished when he landed on the carrier.
Because
mission is going to last another 10 years.
Yeah, because war, revolution, civil war take a life of themselves and become chaotic in a complex system. And that means that the outcome becomes unpredictable. I don't know if you're familiar with the butterfly effect. Lawrence, a physicist, an American physicist, was trying to decide if he can create patterns, weather patterns, and predict them a month, 2 months, a year before. And he entered data into a computer in the early 80s, and it took weeks and months to do the calculations. So every day he was checking the data. He did the first set of calculations, and then he came back to the lab and says, like any good scientist, let's recheck it. Let's redo the operations again to see if it confirms the original experiment. So he re-entered the data in the computers and asked the computer to graph again the pattern that he entered with the isotopes and all that. And every day at the beginning, the two lines were identical. You couldn't see that there were two lines. But as the time was advancing, he started observing that the green line, the second one, was diverging and making a different pattern with the red line, the original one. And he asked his engineers, computer engineers, is that something wrong in the software? Do you have a bug in the software? Because that doesn't make sense. I entered the same data in both of them. The graphs should be identical. when you enter 2 plus 2, it should always be 4.
Right.
And software engineers were telling him, no, there is no problem, there is no bug in the software. So he couldn't understand it, and after months and months, the charts were completely different, 2 completely different charts. And at the end, he realized that what happened is that when they did the second experiment, they copied the data from the original, the first experiment, and re-entered it in the computer, so they will not have to enter it by hand one by one. But the computer in the first experiment truncated the data from 4 or 5 digits to only 2. So the new set of data that was entered in the second experiment was truncated. And it gave, every time it was doing calculations, it was making different results because he had those small errors of 0.003. After each operation, it was becoming bigger and bigger and bigger. And he came with the principle that a butterfly that flaps its wings in Australia can create a hurricane in New York or in Paris. Okay?
Wow. Okay.
So
the ripple effect.
Yeah. So
over time, and time distorts it.
Exactly. So this is the problem with complex systems, is that you switch something on and it creates a chain that you don't predict. We had that problem with Chernobyl and with 3 Mile Island accidents. So this is the problem, is that if he, that's what Nixon did. He said, I'm gonna delink the dollar, it's gonna make the correction that I want, and then we'll go back. But it didn't happen this way. It created a chain reaction, and gold was not in total control of the US government and produced a collapse of the US dollar from almost $35 to an ounce to 850. Okay.
Yes. Okay.
So this is the problem that we'll see today again. You had that sale, but I don't expect the IMF to do it this time around. The mood has changed, and even yesterday and the day before, you had the governor of the Bank of England, Mr. Carney, who was governor of the Bank of Canada a few years ago. And when the crisis happened in 2011, he made a speech in Toronto in which he cautioned the international community of a Minsky moment in the global economy, in the global debt field and the currency field. The Minsky moment was mentioned by Miss Yellen maybe a year or two later, and you'd had Bernanke who told, I think it was Jim Rickards in Korea, that the present system is unsustainable, he said. And 2 or 3 days ago, you had Mr. Carney again calling for an end of the US dollar supremacy system. So signals are being given, and at the same time, you have central banks buying gold. Now, they are not selling, they are not interested in selling anymore. They are buying extensively. We are very familiar with Russia and China. Yeah. Yesterday, there was an article that banks controlled by the government of Russia, one of the banks has decided to move into the gold market extensively. So you have China who's buying gold, but they are not giving the correct data. They are hiding information, in my view. It's a speculation, but it's an educated guess after a lot of research. I think they are hiding their cards because they consider gold as the major card in their war against the United States, which they call the hegemon.
Right.
So Vladimir Putin.
You know what's interesting, Dan, is that, you would expect that from China, you would expect that from Russia, but you wouldn't expect that from the UK. So even our friends or past or former allies that we've had since World War II are also entering the de-dollarization camp. So we have no friends left, do we?
That's my complaint for Donald Trump. but because he decided to make everybody an enemy. Now, I understand making the Chinese an enemy. I understand to make the Russians, but he made the Europeans, Canada, Mexico, everybody. And he seems to believe that America can go alone and destroy the world, and that the America is completely invincible because God is supreme and there is no God because God is United States. That mentality is very dangerous because it's completely false. It denies history and it denies the law of nature. And if you believe in God, it completely makes a mockery of God when you pretend that you are. And actually, Donald Trump made certain allusions in the last few weeks and months that
Well, he's the chosen one.
Yeah.
Okay. Yeah. All right. So this, perhaps what's going on is that this was already in motion since the Minsky moment, and the catalyst for it coming to manifest is the type of nationalism that's not only here, but spreading across the world. Lack of cooperation, and countries around the world, Poland, everywhere, looking inward and not outward. And I've actually heard some people say that, don't worry about any kind of world war because everyone's going to be busy trying to hold their own social fabric together. Are you in that camp that, a lot of the reason for gold ownership for a long time has been, fear of a Middle East war, wars, but really what it could be is civil unrest and social problems within each country, that everyone's so busy taking care of their own problems, they don't have time for an international hot war.
Yes, Dale, I also agree. I don't see a world war, but I do see the five major countries in the world today: United States, the European Union, Russia, China, and India. Each one has problems. Each one denies
internally.
United States, it is in a state of denial. It has major internal social, political problems that are ready to explode. Europe, the European Union, also has structural, they are different from United States, but there are still major problems. Russia appears very stable, but it has its own problems internally, social problems. Vladimir Putin has ignored corruption, excessive corruption in Russia. India has its own problems. They've tried to manipulate the currency by reprinting the low currency, by eliminating cash, and it was a disaster.
China, was that the first international experiment in going cashless, and have governments recognized that it's not a worthwhile experiment, or do you still believe they're going to go ahead with the war on cash?
They will still try to go with the war on cash, but it's India was a failure.
Yeah.
I think that Dale, something else that I want to mention to you is if you listen carefully, you have the people in the Bitcoin community, the cryptocurrencies, saying, "Oh, the solution is the crypto, going cashless and all computer-based currencies." But if you observe the language of the central bankers like Carney, like Powell, before Powell, Yellen, Draghi, Mrs. Nabiolina of the Bank of Russia, they all tested. People don't realize that because they don't pay attention to the words of leaders. But if you listen carefully to Mr. Carney, he said it a few months, I think 6-9 months ago, we've tested cryptocurrencies and it's not good. It's not good. There are major flaws. The Federal Reserve, I think it was Bernanke who said, we've been testing it. recently in a speech, I think in St. Petersburg, the governor of the Bank of Russia said, no way Bitcoin or cryptocurrencies in Russia. She said it clearly. And she said also, but I don't exclude the possibility of a crypto ruble backed by gold, which is different than a cryptocurrency like Bitcoin. Okay? And
backed by nothing but halving and supply.
Yeah, the Chinese also mentioned recently that they are working on a cryptocurrency. Now, the crypto bugs, Bitcoin bugs, usually jump and say, okay, this is it. China's going Bitcoin. China's not going Bitcoin. They are creating a crypto, what they call in the field stable coin. They are creating a yuan, digital crypto yuan, which is nothing different than an old paper yuan. It's the same thing, only in a digital crypto form. Okay, so they are not going into the crypto, which is based on a mathematical formula that makes no sense.
They're just digitizing what already exists.
I have, as a physicist and a software programmer, I have to correct you, because you're repeating what idiot Bitcoiners repeat all the time. We've been on digital money for 40 years, Dale.
I know, you know, I went into the bank and asked for about $6 grand cash, and they said they didn't have it.
But Dale, I've been using digital dollars and digital Swiss francs since 1980.
Yeah.
My digital card, debit card, from the Royal Bank of Canada and from Union Bank of Switzerland, when I was living in both countries, it was a digital. The currency system went digital, went electronic in the early 1980s. Since the 1980s, we've been on electronic money, on digital money. What is coming now, and it's not a revolution, it's a pure advancement, an upgrade, if you want to call it. It is this digital money, those digital dollars, those digital Swiss francs, euros, are now being securitized with a crypto technology. You understand?
I do.
It's like your paper dollar. If you look at a paper dollar that was printed 100 years ago, you look at a paper dollar that was printed 50 years ago, and you look at the latest $100 US bill, crypto and Bitcoin bugs don't realize that your paper $100 bill is cryptic. It has incredible cryptic information on it.
Yes, the watercolor marks everywhere. Yeah. So they already they could already track it. Your hundreds are already trackable like a digital current. Like
exactly, there is all kinds of visual, optical coding on each bill today. They are not even on paper anymore. They are plastic with metal. Okay.
Right.
So so that's what's happening right now, is that most of the central banks, and here I also want to correct you on something. I might be wrong, but I do in my research, the way I do research, I call it, and it's not just me, but the CFA Institute in their exams. I don't know if they still do it, but when I first tried the exam about 20 years ago, they were teaching an analysis called mosaic analysis. What is mosaic analysis? Is that you don't specialize in technical analysis, in fundamental analysis, in geopolitical analysis. You look at all of them as different pictures from different angles, and you combine this puzzle of information detached that appears insignificant when you look at it individually. But when you put the puzzle together, it gives you a picture that you're not supposed to see and you're not supposed to know. So this is kind of getting inside information, but legally. So when I do this kind of mosaic analysis today, I look at the global picture and what's happening. Since Donald Trump has declared the dollar as a weapon in his war against the world, it has forced countries to avoid the dollar, to find alternative systems to the dollar. Like the president of Russia said, we are not running away from the dollar, is the dollar who's running from us, okay? So you have the whole world, Europe, Russia, China, India, who are trying to avoid using the dollar system. When I put the information from the Russians, from the Chinese, from Mr. Draghi, from the European Central Bank, from political leaders, there's been several papers in Europe that have been published by the European Union and by the European Central Bank to force companies from now on to price their products and to charge in euros and no more in US dollars. The Russian government announced recently the same thing, that it will go and use only rubles or yuans or euros. So what I observe by doing this mosaic analysis, I'm seeing not each country for itself, as you mentioned before, kind of populist nationalist, but I see a new realignment being created internationally, isolating the United States, actually America itself isolating itself, not the world isolating the United States. And I see negotiations in the monetary system and in trade, more specifically. They have differences politically and militarily. Europe is not in sync with China. Europe is not in sync with Russia. They have political conflicts. But on two issues, they seem to come close together more and more. And that is in trade and in the international monetary system. There seems to be negotiations with the new payment system created by the European Union. Russia participates in it, and China is in the background in the negotiations.
And they have their own, they've developed their own, system as well to avoid our payment system, the SWIFT system. Haven't they developed a payment system, the Chinese, that's comparable to SWIFT?
Exactly, Dale. But what's interesting is that they are negotiating with Europe to link the European one to the Russian and Chinese.
Okay.
Okay, this is more important because it gives more power. There is a historical, I've learned it in grade 1 in school, a story for children's, where you put one road and you try to cut it into, to break it, and it breaks. But if you put 10 of them together, you cannot break them. It's a children's story that I learned in grade 1 and kindergarten. United States, Trump believes that he can go alone. He doesn't need anybody. He's gonna take a machine gun, a nuclear bomb, and threaten Europe, threaten Russia and China. He doesn't need anybody. He can go alone. And that's where I think it's wrong. And that's where I think it's hurting the dollar right now. It's gonna be a collapse of the dollar, and then that's what's signaling gold. In the last year.
So, I mean, the dollar yet hasn't really capitulated at all, yet gold has already is signaling the move away from the dollar. What do you think will be the final catalyst to take the dollar down from, say, this 98 level, right around par, to take us back down? Is there any kind of event, or is it just going to be a slow erosion of time, and then you reach a tipping point and it happens all at once? And do you know what that might be, that event that really triggers it, just like getting off Bretton Woods? Could there be some type of event in the future that you see really being the last nail in the coffin of the dollar as a reserve currency?
First of all, Dale, I have to slightly correct you. This process started in 1971.
Right. Right.
It's a very long, it's a historical one. Currencies don't
Yes.
die spontaneously. The British pound was not replaced by the dollar in 1 year, but in a period of 20 to 40 years.
Okay.
The process going
But
away
World
from the
War II
dollar,
was an important catalyst for that switch to take place, right?
yeah.
So there still was an event that gave the U.S. primacy. What do you think could be an event with all these different geo risks on the table that could really accelerate the dollar's decline?
You see,
The
just
re-election of Donald Trump?
you see what my theory, my hypothesis has been for the moment is that a collapse, a breakout with quantum leaps of $500 moves in gold will come. I'm quite sure, but it's still a speculation from my part. It will correspond with the collapse of the U.S. stock market,
Okay.
and which will trigger a run from the dollar by investors to protect their assets, because for the moment they've been invested in U.S. stock market. So I think that
Okay.
I think the trigger that could be and could start a run on the bank, as we call it, a run on the dollar, as it happened in 1971, that started in 1968 when the London gold pool collapsed. I think the same thing will happen if you see the stock market collapsing, since you have a lot of institutional money. It's not individual money today that runs the world. It's institutional money, pension funds, mutual funds, hedge funds, and they heard like anybody else. They pretend to be geniuses, but in reality, in panic, the great gurus of Wall Street and the great political leaders and the central bankers will react the same way as an individual. They will herd running to the door like they did in between 1968 and 1971.
Dan, I really never mind being corrected by you, because every time you've been with me, I've learned pearls from you. And you talked today, you dropped enough pearls to string a necklace. So
Yeah,
I really respect you. And right now I'm showing your Twitter so that people know how to get a hold of you and continue to be educated by probably, I really think you're one of the best out there for explaining what's happening to the monetary system and how to protect yourself, and at one of the most critical times in our history for people to educate themselves and to get prepared. So also here's where you could find Dan and a lot of his content. I'm pulling up your, I don't know if you want to call it a website, Dan, or your blog, or
yeah. I usually put, I used to do much more. I'm in the process. I moved to Europe, so I'm in the process of changing things.
okay. Where'd you go in Europe? You know,
France.
oh, interesting. Okay, so you think that's going to be a good place to be insulated from everything you've been talking about?
You don't make those kinds of decisions. You make them for family reasons.
Okay.
You make them for to be happy, and
Yeah.
not just necessarily for money.
Yeah, or
You,
well, you
you
want to
know,
protect your family. I don't think, if what you say is happening, I think it could be, you've been through some political upheaval in your life. And if you care about your family, it's not going to be easy here in the US if everything you say manifests. It's not going to be how much you have in the bank. It's going to be how prepared are you for when the system isn't working for everyone. So everyone, here's Dan, handsome guy. Been in these markets for a long time, and you will learn about what's happening in the world, as you could tell from hearing him today. Dan, I want to thank you for taking time to edify our community with your wisdom.
Thank you very much. It was a pleasure there. Always a pleasure.
Okay, my
Have a
friend. So,
beautiful end of a summer and a beautiful fall.
okay, yeah, all we have is now. Money comes and goes. Time is gone forever. If you could find a way for me to buy some time, let me know, Dan.
Okay.
All right. All right, everyone. So that's a wrap for today, everyone. Thank you very much. And remember, don't just count your bars of gold and Krugerrands and Morgan silver dollars. Count your blessings, and we'll see everyone tomorrow. Adios. So you're very welcome, everyone. And thanks again, Dan. And we'll wrap it and see everyone tomorrow for investing.com Thursday. Adios. And thank you, Dan Popescu.
Thank you very much.